Good morning. I'm Gary DeWaal, and this is Bridging the Week for January 16th to 19th, and today is January 22nd, 2018. The Securities and Exchange Commission's Division of Investment Management warned sponsors of registered investment funds not to seek approval to trade cryptocurrencies because of many concerns regarding the asset class. Separately, the Commodity Futures Trading Commission publicized two enforcement actions involving alleged fraud in connection with cryptocurrency investment schemes. A third action has been reported filed by various media, but not yet publicized by the Commission. The U.S. government shut down on Friday night because of Congress's unwillingness to fund the nation's deficit. Hopefully this has been resolved by today. So I can follow developments in this unfolding surreal drama. Let's get started. The SEC's Division of Investment Management issued a letter to two industry organizations stating its belief that, as of now, it was not appropriate for investment fund sponsors to seek registration of SEC-regulated funds, such as mutual funds or exchange-traded funds, to, quote, invest substantially in cryptocurrency and related products, end of quote. This is because, said the SEC, quote, there are a number of significant protection issues that need to be examined before sponsors begin offering these funds to retail investors, end of quote. Moreover, the division said that if an existing fund able to use a post-effective amendment to substantially invest in cryptocurrencies did so, it will review such act, quote-unquote, unfavorably and might recommend a stop order to the Commission. The two industry organizations receiving the division's letter are the Investment Company Institute and the Securities Industry and Financial Markets Association's Asset Management Group. Although the division noted that, quote, flexibility to innovate, end of quote, is a key feature of the law governing investment funds, and that advocates of cryptocurrencies have suggested a, quote, range of potential benefits associated, end of quote, with the product, critics, quote, have raised various concerns regarding transparency of information, trading, valuation, and other matters, end of quote. As a result, the division sought input regarding a number of relevant matters. These include how funds would value cryptocurrencies, choose newly created cryptocurrencies to invest and deal with forks of existing digital products, take steps to ensure they had adequate liquidity to meet redemptions, and comply with custody requirements. The division also inquired how concerns expressed by some, including SEC Chairman Jay Clayton, regarding the potential for manipulation and other risks associated with cryptocurrencies impacted fund sponsors' views regarding valuation and liquidity. The division indicated that until its questions were answered, quote-unquote, satisfactorily, it was not likely to approve registered funds to invest in cryptocurrencies. The division provided no deadline for the two industry groups or others to respond to its questions. The issuance of this letter to two industry organizations, instead of generally soliciting comments through a Federal Register-related, more general public solicitation, is an odd process and may seem to constitute inappropriate additional delay by the SEC in approving investment funds to trade cryptocurrency products. This is particularly the case after the CFTC has either affirmatively authorized or accommodated trading of Bitcoin derivatives by numerous of its overseen exchange and participants. I have my views on this matter on the article version of Bridging the Week on the website. Check it out. The Commodity Futures Trading Commission filed two enforcement actions in a federal court in Brooklyn, New York, alleging fraud and other law violations in connection with cryptocurrency investment schemes. In one action that named Cabbage Tech Corp., a New York corporation, and Patrick McDonald, its owner and controller, the CFTC charged the defendants with unlawfully soliciting customers to send money in virtual currencies for virtual currency trading advice and for the discretionary trading of virtual currencies by Mr. McDonald. However, alleged the CFTC, the defendants did not provide the promised services and solely misappropriated their customers' funds. In the other action, the CFTC named as defendants the Entrepreneurs Headquarters Limited, a company incorporated in England and Wales, and Dylan Dean, its sole founder, principal, director, and officer. The CFTC charged that the defendants solicited Bitcoin from customers in order to pool their funds and invest in financial products, including binary options traded on Nadex, a CFTC-registered binary options exchange. In reality, claimed the CFTC, the defendants misappropriated customer funds, including using assets from some customers to pay other customers in a Ponzi-type scheme. The CFTC charged all the defendants in both actions with fraud, and EHL Mr. Dillon with acting in capacities requiring registration under law without being registered. The CFTC seeks a permanent injunction against all the defendants, disgorgement, and fines, among other penalties. The media reported that the CFTC also filed a third enforcement action last week in connection with an alleged cryptocurrency investment scheme. However, no details were available by last Friday. And finally, the Industrial and Commercial Bank of China Financial Services agreed to settle allegations by the Securities and Exchange Commission that it violated regulations show because it failed to close out on a timely basis short equity sales of positions of correspondent brokers when the brokers failed to deliver the requisite securities. ICBC agreed to pay a fine of $1.25 million to resolve this matter. According to the SEC, from April 2013 through August 2016, ICBC claimed lawfully available credits against its closeout obligations when it did not fully comply with technical obligations to claim such credits. Moreover, alleged the SEC, during the relevant time, ICBC had quote-unquote institutional knowledge of its ongoing failure to deliver positions resulting from its impermissible claims of credit through generation of a daily operational report. However, said the SEC, ICBC did not review this report to identify its prolonged failed positions until January 2015. The SEC noted that it accredited ICBC's remedial acts and cooperation in agreeing to the settlement. Well, that's it for this week's edition of Bridging the Week. As always, there is more information and more articles on the article version of Bridging the Week on the website. Check it out. I'm Gary DeWaal. Have a great week, and until the next edition of Bridging the Week, ciao.